Are you a market mover? Let's find out. So, in earlier episodes, we've covered the basics from opening a bank account to understanding stocks, bonds, and ETFs. But now it's time to dive deeper and explore 4 dynamic investment strategies that can take your financial journey to new heights. So, follow along this little investing personality quiz and find out which type of investor you are. If you're ready to build upon your foundational knowledge and explore strategies aligned with your financial goals, then let's get into it. Welcome to Sustainable Sense, where we invest in climate defense. You're in for our hot take on all things money, markets, and the environment. Let's start off with our first personality, value investing. These investors believe they can find stocks that are selling for less than they're truly worth, just like finding designer jackets marked down to a fraction of its original price. They operate on a principle that the market isn't always rational. Sometimes stocks are undervalued simply because they've been overlooked or misunderstood by other investors. This perceived irrationality presents an opportunity for value investors to swoop in, grab these discounted stocks, and potentially make a profit when the market does correct itself. They've got a keen eye for these kind of things. Now, you might think that finding these undervalued stocks requires hours of digging through financial reports and market data, but it's not always the case. Value investors have a few tricks up their sleeve. For instance, they often rely on tools like price-to-earning ratios, or P/E ratio, to quickly identify potential bargains. It's like having a price tag that tells you how much you're paying for every dollar of the company's earnings. This shows you if your risk is truly worth your reward. So, does your personality fit value investing? Well, it's best suited for those with a patient mindset. Think of it as planting seeds in a garden and waiting for them to grow into tall trees. Legendary investor Warren Buffett embodies this patient approach to investing. When he invested in the struggling airline industry, he famously remarked that airlines had a bad first century. His investment philosophy focuses on the long-term prospects of a company rather than short-term gains. Over time, value investing has proven to be a profitable strategy, delivering superior returns for those who have the patience to stick with it. However, it's not without its challenges. Rationality and irrationality are tricky concepts. Finding those hidden gems can also be pretty tricky. And even if you do find them, success takes time and patience. There's no guarantee that the stock you've invested in will live up to its expectations. For second personality, we have growth investing. Growth investors aren't interested in bargains. They're chasing the next big thing. They seek out stocks with strong potential for future growth, believing in the promise of tomorrow's success. Unlike value investing, growth investing isn't about finding undervalued stocks. It's about identifying companies poised for expansion. But this strategy comes with its own set of challenges. While there's no one-size-fits-all approach to growth investing, investors should consider factors like management quality and competition. After all, growth is no easy feat, and a strong leadership team is essential for success. Managerial factors also influence pricing. So, does your personality match that of a growth investor? It's best suited for those willing to take on more risk and those with a shorter investment horizon. And while growth stocks can offer quick profits, they're also more volatile and susceptible to market downturns. On the upside, growth stocks aim for quick capital appreciation, offering the potential for rapid gains. Once a company hits its growth stride, stock prices can skyrocket, fueled by momentum. But it's not all so great. Growth stocks can be pretty volatile, and if a company fails to meet expectations, its stock price can plummet. The other downside is the lack of dividends. Companies in growth often reinvest their profits to fuel expansion, leaving little cash for shareholders. Our third personality of investing is momentum investing. Momentum investors are like surfers catching waves in the stock market. They're constantly scanning the horizon for the next big swell, believing that stocks in motion tend to stay in motion. Is this bringing physics class back to anyone? It's all about riding the momentum of trends, hopping onto stocks that are rising and bailing out of those that are sinking. Now imagine you're at a bustling marketplace where vendors are shouting out their prices. Momentum investors are the ones who quickly jump in when they hear the buzz around a hot commodity, hoping to ride the wave of excitement and make a quick profit before the buzz dies down. But here's the thing. Momentum investing isn't for the faint of heart. It's like trying to catch a wave in an ocean. You need to be agile and ready to react at a moment's notice. Success hinges on a quick decision making and the ability to spot opportunities as they arise and jump out before they fall. And just like surfing, momentum investing comes with its fair share of risks. If you mistime your entry or exit, you could end up wiping out. It's a pretty high stakes game for those who are ambitious risk takers. So, for those who thrive on adrenaline and love the thrill of the chase, momentum investing can be an exhilarating ride. With the potential for quick gains and constant market action, it's a strategy that keeps investors on their toes, making it a thrilling adventure in the world of finance. Finally, our last personality is dollar cost averaging. Imagine you're building a house, but instead of buying all the materials at once, you decide to purchase a little bit each month. That's essentially what dollar cost averaging, or DCA, is all about, making regular investments in the market over time, regardless of its ups and downs. You're not trying to time the market or pick winners here. You're simply committing to investing a fixed amount regularly. Now, here's where it gets interesting. With DCA, you're not only spreading out your investments, but you're also taking advantage of market fluctuations. When prices are high, your fixed amount buys fewer shares, but when prices are low, you get more bang for your buck. It's like going to the grocery store when certain items are on sale. You're still spending the same amount of money, but you're getting more for that money. But the real beauty of DCA lies in its ability to remove the emotional factors from investing. Instead of trying to guess when to buy or sell, you're sticking to a disciplined strategy no matter what the market is doing. So, does your personality match DCA? Dollar cost averaging is a smart choice for most investors, especially those who want to stay committed to saving while reducing the effects of market volatility. Whether you're a newbie or a seasoned investor, DCA can help counteract common biases that can trip up even the savviest of investors. But here's the thing, DCA requires steady cash flow and recurring disposable income. It's not a strategy that you can set and forget. You need to have the means to keep investing regularly. On the upside, DCA can be combined with other investment strategies, giving you the flexibility to adapt to a changing market condition. Ultimately, the best investment strategy is one that aligns with your financial goals. Just as every investor is unique, so too is the optimal approach to investing. It's all based on your personality, really. For those seeking quick profits with high risk, momentum trading may be the way to go. On the other hand, if you're aiming for long-term growth and stability, value stocks might be a better fit. The key is to carefully consider your objectives, risk tolerance, and time horizon, and choose the strategy that best suits your circumstances. Remember, there's no one-size-fits-all solution in investing. What matters most is finding the approach that best works for you. So, are you a market mover? And what kind of investor are you? So, take the poll below or head to our Instagram and take our little personality quiz to find out. Anyway, if you have any questions or topics you'd like us to cover in future episodes, feel free to reach out to us on Instagram at Sustainable Sense Podcast, or reach out to us on Gmail at sustainablesensepodcast@gmail.com. Again, that's sustainablesensepodcast@gmail.com. We love hearing from our listeners and cannot wait to get to know more of you. Until next time, this is your host signing off. And as always, invest your sense in climate defense.